Have dropping oil prices finally bottomed out? Analysts are raising their forecasts for oil prices as they rise above the $50 a barrel mark last week for the first time since November. So where does oil go from here? WSJ Heard on the Street Deputy Editor Spencer Jacob joins us now. Welcome, Spencer. It seems like we spent a lot of time discussing where oil prices would go. Now close to $50 a barrel this morning. What do you think we can learn from this?
What we could learn from that is that forecasts are really bad usually, right? I mean, back in February, we were at about $26 a barrel for the U.S. benchmark WTI. We're nearly double that today. And analysts, we ran a story today in the paper. They've been upping their forecast each month as you survey them. Now they're up to about $43 a barrel average for this year. And they're going to keep on raising those if we stay around here or go higher, because the market got tight in a hurry, got a lot tighter a lot faster than people expected.
And so what are the specific factors contributing to this rise in oil prices?
One thing, there are a couple of things that are unexpected. One, these wildfires in Canada, which is unprecedented. It took over a million barrels a day off of the market. Then you have violence in Nigeria. That's cut their output by up to 800,000 barrels, where you have rebels that previously were sort of getting paid off by the government who aren't anymore. They're blowing up pipelines and threatening workers, and you could have more come out of Nigeria, a major producer, soon. And then the real wild card is Venezuela. There, you haven't had any production declines yet, but people are very nervous about it.
Yeah, certainly the country is not doing well. We know that there are protests there over electricity cuts and everything like that. So looking ahead to the OPEC meeting on Thursday, what can we expect to see there, do you think?
So you have this conflict within OPEC, and it's really down to the Iranians and the Saudis. Iran had sanctions lifted. Their production is rising steadily now as they ship out oil, as they produce more, as they're free to sell oil really to anyone. They already were exporting a lot. They're now back about to where they were pre-sanctions, but they have their sights set on a much higher level of exports, especially if they invite in foreign capital and expertise. They can do that. Now, the Saudis, who are always the swing producer in OPEC, you know, they were under pressure when prices were very low, and the pressure is abated now, to do something, to cut, you know, to take some action. And the Saudis said, well, this is our regional rival. They're involved in a couple of proxy contests in the Middle East with the Iranians. And no, we're not going to give up production unless the Iranians agree to freeze.
So are they back at normal production levels now then?
Well, I mean, it's hard to say for Iran what's normal, because they're still way below, let's say, where they were prior to the Iranian Revolution in 1979. They have the potential to do a lot more. The Saudis they say they're not going full tilt, but they are at a very high level of production. They claim that they have some spare capacity in case of an emergence in the oil market, but they are at a very high level of production, and they don't want to freeze or curtail their output just to give market share to the Iranians. And so that's the inherent conflict. But that pressure on the Saudis has lifted now that the $50 is still pretty bad for these guys, you know, for their budgets. But the trajectory is up. We've nearly doubled in price. And so this might be a sort of a nothing meeting, and a meeting with less pressure on the Saudis from the other members of OPEC to do something.
Right. Well, we will certainly all be watching this OPEC meeting. Spencer Jacob, thank you so much for that.
Thank you.